The Russian economy is successfully growing its way out of the slump that it was in 2008-2009, and while the initial recovery was led primarily by resources sector and manufacturing, now we see finally that there is more coming from the domestic stories and the domestic demand. As a good indicator of that, we can say that finally in the end of 2010, beginning of this year, and mid-2011, we see that the lending, both on the corporate and retail side, has increased dramatically and reached the levels that it was in 2007-8, when the expansion of the Russian economy was primarily driven by the credit cycle and the expansion of credit, basically because the market has been significantly under-penetrated for that matter. The Russian market is relatively attractive to foreign investors because the economic growth in excess of 4% to 4.5% for 2011 and expected 4% for next year is significantly higher than what we see in the developed markets, both in Europe or in the Northern America. Although it is a little bit lower than those growth rates that are seen in the Chinese or Indian economy, the valuations of the Russian market and most of the Russian stocks are significantly lower than those of their peers. Very importantly, investors are focused on the sectors that are expected to deliver EBITDA growth and cash flow growth, net income growth in the end, in excess of 10 to 15%, which would imply that the stocks are relatively less expensive at current multiples, and given the growth, are expected to deliver a good financial performance over the next 2 to 3 years. When we look at those sectors that are capable of that performance, we see primarily non-resource companies and non-resource names. That is mostly retail, banking sector, pharmaceutical companies, IT and media. These are the sectors where the growth is expected to be in excess of 40% on the EBITDA level over the next 2 to 3 years. It is important to notice that the growth of the real disposable income of the population was virtually unaffected by the negative consequences of the crisis, because it was among the government priorities to give support to the pensioners, to the receivers of the budget money. So we saw actually increasing 3.2% growth of real disposable income in 2009. And that is something that we expect the government has got the potential to continue, and something that will be unfolding in case of any slowdown of economic growth. Also, the government makes it one of the top priorities to focus on the infrastructure projects in expectation of the large events that are going to be held in Russia. The Sochi Olympics in 2014 is one of those. The next one is the World Cup in soccer in 2018. Both those projects are expected to attract a lot of investments, and that's what's going on the infrastructure side. And that is another driver for companies in sectors like infrastructure or transportation that are increasing their operations and leading on the way of economic growth in Russia. This is why Uralsib Capital is paying the most attention to the other Russia economy story, where actually the growth is going to be in place in the post-election period and over the next 3 to 5 years.
Russian economy is in pretty good shape this year. In the first 8 months, GDP grew 4% year over year, and in the fall we see subsequent acceleration of GDP dynamics. So for the entire year we are going to have even bigger growth figure. Russian industry is also in a very good shape. It goes consistently in excess of 5% this year. What's really good is that mostly the industrial growth is driven by manufacturing, which shows that Russian economy is less and less dependent on oil, and that sectors oriented towards domestic demand become more and more promising. I would like to mention sectors such as transportation, telecoms, banks, retailers, fertilizers, and other sectors. Real incomes also grow, and retail sales grow at a very good pace, which is supported on one hand by real incomes growth and on the other hand by rapid credit expansion. So in addition, we see a substantial surplus of the federal budget deficit, which is about 2.5% of GDP right now. And we also see a substantial decrease in inflation. So overall, Russian macroeconomic situation looks pretty good. However, I would like to emphasize that this currently bright Russian macroeconomic picture is, of course, subject to external risks, which are risks of, first of all, economic deceleration in developed countries, and also European and American sovereign debt problems, and the increased volatility in the markets. If we indeed see deceleration in developed economies, then we will see somewhat lower oil prices, and also we will see a different macroeconomic picture in Russia next year, which will be slower growth, slower production. We also see weaker ruble, lower inflation, and a larger budget deficit. So given the growing concerns about the perspectives of global economy, Russian financial markets currently overreact to external news flow and mostly pay too little attention to strong fundamentals of the Russian economy. However, when the situation in developed countries stabilizes, we will see a substantial increase in investor interest towards Russian stocks, in particular towards the stocks of companies which work in sectors oriented towards domestic demand.
Okay, definitely it's not very easy in such market conditions to remain quite positive on banking system. But there is no doubt that we can say that Russian banking system is in much better position than European banks and US banks as well. So first of all, I would say a few numbers, quite positive numbers, which can actually help investors to remain and to be more positive toward Russian banks than toward our European and other US banks. So first of all, the growth of lending is quite high at this moment of time, with corporate lending growing at least 17% year on year. Retail lending is growing pretty fast at around 26% year on year. And credit risk is pretty low versus 2008-2009 levels. For instance, we can say that non-performing loans to gross loans is around 5% at this moment of time, while it was at around 10% just a year ago. Talking about other risks, they are also pretty low at this moment of time. Currency risk is really low, so with retail lending in dollars, for instance, accounting to at least 7% versus 11-12% in 2008. Talking about solvency risk or capital adequacy, we can say that capital adequacy ratio is at a pretty high level at around 16%. While we all know that actually European banks and US banks should raise their capital in order to fit with the requirements of Basel III. We also can talk about other risks such as refinancing risk or liquidity risk, and we all know that liquidity assets at this moment of time amount to at least 30% of total assets of Russian banking system versus 25% in 2008. And all Russian banks can refinance their short-term liabilities quite easily at this moment of time, as they don't have a very big amount of short-term liabilities. The only risk we can talk about at this moment, we can talk about market risk. Market risk is pretty high, but if we talk about this kind of risk, we can say that in case of any much more adverse market condition, it should be a one-off loss, and in other cases, Russian banks should this loss should be offset by high net interest margin and high net profit of Russian banks. So all in all, we can say that investors should pay attention to Russian banks at this moment, as they don't have exposure to sovereign debt in Europe, as other risks are at pretty low levels, and they should trade at least at premium or in line with emerging market peers, as the growth is pretty strong at this moment of time. So Russian banks, again, in much better position, and current valuations are pretty low, which are actually undemandable at this moment of time.
Main steps in Russian utilities sector reform are complete now, and we can see that generation companies already sell electricity to non-residential customers at the liberalized prices. We also see that all the grid companies works already on the long-term regulation system, but unfortunately now government have to adjust all these new tariffs system regulation to reality. And we expect that when the election campaign for the presidential election for 2012 will be complete in 2012, then utilities companies will have more clarity over their financials. And we believe that 2012 will be much better for the utilities companies comparing to their performance in 2011.
Consumer sector in Russia by far outperforms many of other industries. In the light of strong growth in consumer demand, many of consumer stocks seem oversold during current market volatilities. In average, the consumer stocks trade between 4 to 6 EV/EBITDA, and of course we recommend looking into the companies which have more defensive demand, just facing the risks of possible economy downturn or slowdown. Firstly, we would look into food retailers, where Magnit seems to be the best stock at the moment. The company trades at 8.5 EV/EBITDA, which has never been so low. The second look we would give into pharmaceutical stocks, where the demand is also quite defensive and inelastic, although foreign exchange risks do exist. We like Veropharm here. The company trades at a record low 4 EV/EBITDA of 2012. We like quite Nvidia, the only equity exposure to consumer electronics retail in Russia, and the company trades at 4.7 EV/EBITDA currently. Regardless, it's very strong balance sheet, strong cash generation, and growing dividend story. We see the real estate stocks as the most vulnerable to current economic and market conditions, which is both to the high beta and high leverage. Also, the revenue stream may be under risk, given that the banks may cut the mortgage financing. Also, the consumer confidence can go down. A halt in revenues, which we saw in 2008, is still a vital example. Amongst real estate stocks, we definitely prefer LSR thanks to its diversified cash flow base, excellent corporate governance standards. The company traded EV/EBITDA 2012 of 6. But we believe developer stocks would be the last one to pick up and perhaps the most to undergo the correction. We remain positive on the consumer names in Russia and believe they are strongly oversold under perceived risks. And we do believe that investing at this moment into consumer names would promise decent upside potential to investors.
Russian telecom companies proved their fundamental resilience to economic slowdown, and at the same time they have pretty reasonable growth rates provided by traditional and modern services. We assume that data services, both fixed and mobile, will become the main driver for the sector in the forthcoming period. At the same time, traditional services, both fixed and mobile, are providing companies with sufficient cash flows to provide general dividends and provide necessary funds to investment in data services development. Overall, we expect that the Russian companies will deliver around 6% annual average growth rate in next 4 years, and with EBITDA margins in low 40s. Russian broadband penetrations remain at a very low level, which is far below European levels, with only 30% of Russian households connected to the internet. And we expect that internet penetration by 2015 will reach 67% countrywide, with regional development becoming the main growth driver for broadband, as the main cities like Moscow and St. Pete are already highly penetrated at around 60 or 70%, while the rest of Russia is only 25% penetrated by internet. In the mobile area, we assume that mobile revolution and development of mobile devices and increased amount of end users with internet-ready devices will drive growth of mobile data services, and expect that about 40% of mobile users will actively use of mobile internet in 2015. Russian telecom sector proved its defensive nature in 2008 and 2009 when companies continued to grow because Russian customers continued to use telecommunications heavily and provided both growth of customer bases and revenues for telecom companies. In current volatile environment, we assume a Russian telecom sector offers a relatively safe investment opportunity.
Government focus on modernization should support growth of Russian IT sector.
It should happen both through direct purchases, through tax stimulus, and through stimulation of private spending on IT. And as Russian broadband and PC penetration growth, it should support market expansion further. And we believe that Russian IT companies should benefit from the strong labor pool and high standards of education, which would allow them to become competitive on the international market for IT outsourcing. Russian media sector offers direct exposure to the purchasing power of Russian consumers. We expect that Russian advertising market would expand by 53% by 2015 to $17 billion. We believe this assumption is a conservative one, given that the ratio of advertising spending to GDP is in Russia just 0.6%, which is much lower than that of many other emerging market economies. We expect that Internet would naturally be the fastest growing sector in the market, expecting it to grow 150% to $3 billion by 2015. Russian internet market is set to become the largest one in Europe by number of users, and it still will stay relatively closed one. So we believe that local players such as Yandex and Mail.ru will continue to dominate the market in longer term.